fiscal deficit in RE 2020-2021 is pegged at 9.5% of the GDP. Fiscal deficit in RE 2020 to 2021 is pegged at 9.5% of GDP. We have funded this through government borrowings, multilateral borrowings, small saving funds, and short-term borrowings. We would need another 80,000 crores, for which we would be approaching the market in these 2 months. We would be needing another 80,000 crores, for which we would be approaching the markets in these 2 months. To ensure that the economy is given the required push, our BE estimates for expenditure in 21-22 are 34.83 lakh crores. This includes 5.54 lakh crores as capital expenditure, an increase of 34.5% over the BE figure of 2020-2021. The fiscal deficit in BE 21-22 is estimated to be 6.8% of the GDP. The gross borrowing from the market for the next year would be around 12 lakh crores. We plan to continue with our path of fiscal consolidation and intend to reach the fiscal deficit level below 4.5% of the GDP by 2025-2026, with a fairly steady decline over the period. We hope to achieve the consolidation by first increasing the buoyancy of tax revenue through improved compliance, and secondly, by increased receipts from monetization of assets, including public sector enterprises and land. The Contingency Fund of India is being proposed to be augmented. The Contingency Fund of India is being proposed to be augmented from 500 crores to 30,000 crores through finance bill. In accordance with the views of the 15th Finance Commission, we are allowing a normal ceiling of net borrowing for the states at 4% of GSDP for the year 21-22. A portion of this ceiling will be earmarked to be spent on incremental capital expenditure. Additional borrowing ceiling of 0.5% of the GSDP will also be provided, subject to conditions. States will be expected to reach a fiscal deficit of 3% of GSDP by 2023-24, as recommended by the 15th Finance Commission. In the July 2019-20 budget, I introduced the Statement 27 on extra budgetary resources. It disclosed the borrowings of the government agencies that went towards funding Government of India schemes and whose repayment burden was on the government. In my 2020-21 budget, I enhanced the scope and coverage of that statement by including the loans provided by government to the FCI, the Food Corporation of India. Taking a step further in this direction, I propose to discontinue the NSSF loan to FCI for food subsidy, and accordingly, budget provisions have been made in RE 2020-21 and in the BE 2021-22. The extra budgetary resource details are at Annexure 6. We know that the Frbm Act mandates fiscal deficit of 3% of GDP to be achieved by 31st March 2020-2021. The effect of this year's unforeseen and unprecedented circumstances has necessitated the submission of a deviation statement under Sections 4 of Subclause 5 and Section 7, Subclause 3b of the Frbm Act, which I am laying on the table of the House as part of the Frbm documents. Towards achieving central government fiscal deficit along the broad path that I have already indicated, I will be introducing an amendment to the Frbm Act. Honourable Speaker, on the 9th of December 2020, the 15th Finance Commission submitted its final report covering the period 2021 to 2026 to the Rashtrapati Ji. The government has laid the Commission's report along with the explanatory memorandum in the Parliament, retaining the vertical shares of the states at 41%. We recognize our commitment to fiscal federalism and propose, therefore, to adhere to this recommendation. Jammu and Kashmir in the 14th Finance Commission was entitled to get devolution being a state. Now the funds of the UTs of Jammu Kashmir and Ladakh would be provided by the centre. I have also provided on the Commission's recommendation 1,18,452 crores as revenue deficit grant to 17 states in 21-22 as against 74,340 crores to 14 states in 2020-21. Honourable Speaker, I would now move to Part B of my speech. Honourable Speaker, the world is facing a serious challenge of the pandemic and its aftershock. In these trying times, when many economies are struggling to revive, our people and our industry have exhibited remarkable resilience. As I mentioned already, post-pandemic, a new world order seems to be emerging, one in which Asia is poised to occupy a prominent position, and India will have a leading role therein. In this scenario, our tax system has to be transparent, efficient, and should promote investments and employment in our country. At the same time, it should put minimum burden on our taxpayers. I borrow the words of Thiruvalluvar, the saint. Yetralum, Eatalum, Kathalum, Katha Vaguthalum, Nalla Valladarasu. A king or a ruler is the one who creates and acquires wealth, protects and distributes it for common good. Tirukkural. Direct tax proposals. Keeping this in mind, the words of Tirukkural, our government introduced a series of reforms in the direct tax system for the benefit of our taxpayers and the economy. Few months prior to the pandemic, in order to attract investments, we slashed our corporate tax rate to make it among the lowest in the world. The dividend distribution tax too was abolished. The burden of taxation on small taxpayers was eased by increasing rebates. In 2020, the return filers saw a dramatic increase to 6.48 crores from 3.31 crores in 2014. In the direct tax administration, we had recently introduced the faceless assessment and faceless appeal. I now seek to take further steps to simplify the tax administration, ease compliance, and reduce litigation. Relief to senior citizens. I begin my direct tax proposals by offering my pranam to our senior citizens. Many of them, despite having foregone several basic necessities of their own, have strived to build our nation. Now in the 75th year of independence of our country, when we continue our endeavour with renewed vigour, we shall reduce compliance burden on our senior citizens who are 75 years of age and above. For senior citizens who only have pension and interest income, I propose exemption from filing their income tax returns. The paying bank will deduct the necessary tax on their income. Reduction in time for income tax proceedings. This is a very key announcement, if you ask me. Honourable Speaker, presently an assessment can be reopened up to 6 years and in serious tax fraud cases for up to 10 years. As a result, taxpayers have to remain under uncertainty for a very long time. I therefore propose to reduce this time limit for reopening of assessments to 3 years from the present 6 years. In serious tax evasion cases too, only where there is evidence of concealment of income of 50 lakh or more in a year. In serious tax evasion cases too, only where there is evidence of concealment of income of 50 lakh or more in a year can the assessment be reopened up to 10 years. Even this reopening can be done only after the approval of the Principal Chief Commissioner, the highest level of Income Tax Department. Setting up the Dispute Resolution Committee. Honourable Speaker, it has been the resolve of this government to reduce litigation which mars the present taxation system. The government came out with the Direct Taxation Vivad Se Vishwas scheme to give taxpayers an opportunity to settle long-pending disputes and be relieved to further strain on their time and resources. The response from taxpayers has been the best ever, as over 110,000 taxpayers have already opted to settle tax disputes of over 85,000 crores under the scheme. To further reduce litigation for small taxpayers, I propose to constitute a dispute resolution committee for them, which will be faceless to ensure efficiency, transparency and accountability. Anyone with a taxable income up to 50 lakh and disputed income up to 10 lakh shall be eligible to approach the committee. Faceless IT-AT. For ease of compliance and to reduce discretion, we are committed to make the taxation processes faceless. The government has already introduced faceless assessment and appeal this year. The next level of income tax appeal is the Income Tax Appellate Tribunal. I now propose to make this tribunal faceless. We shall establish a national faceless Income Tax Appellate Tribunal Center. All communication between the tribunal and the appellant shall be electronic. Where personal hearing is needed, it shall be done through video conferencing. Relaxations to NRI. When non-resident Indians return to India, they have issues with respect to their accrued incomes in their foreign retirement accounts. This is usually due to mismatch in taxation period. They also face difficulties in getting credit for Indian taxes in foreign jurisdictions. I propose to notify rules for removing their hardship of double taxation. Exemption from audit. Currently, if your turnover exceeds 1 crore, you have to get your accounts audited. In February 2020 budget, I had increased the limit for tax audit to 5 crores for those who carry out 95% of their transactions digitally. To further incentivize digital transactions and to reduce compliance burden, I propose to increase this limit for tax audit for such persons from 5 crores to 10 crores. Relief for dividend. In the previous budget, I had abolished the dividend distribution tax in order to incentivize investment. Dividend was made taxable in the hands of shareholders. Now, in order to provide ease of compliance, I propose to make dividend payment to rate and InvIT exempt from TDS. Further, as the amount of dividend income cannot be estimated correctly by the shareholders for paying advance tax, I propose to provide that advance tax liability on dividend income shall arise only after the declaration or payment of dividend. Also, for the foreign portfolio investors, I propose to enable deduction of tax on dividend income at lower treaty rate. Attracting foreign investment into infrastructure sector. In the last budget, for attracting foreign investment in the infrastructure sector, we had granted 100% tax exemption, subject to certain conditions, to foreign sovereign wealth funds and pension funds on their income from investment in Indian infrastructure. We have noticed that few of such funds are facing difficulties in meeting some of the conditions. In order to ensure that a large number of funds invest in India, I propose to relax some of these conditions relating to prohibition on private funding, restriction on commercial activities, and direct investment in infrastructure. In order to allow funding of infrastructure by issue of zero-coupon bonds, I propose to make notified infrastructure debt funds eligible to raise funds by issuing tax-efficient zero-coupon bonds.